All right, hey everyone, it's Alex again, doing the nightly video for the War Room. So I'm going to show you today how I put on a trade with QQQ, the NASDAQ, day trading using 5 and 15-minute charts. Okay, the indicators I used for this was the 9 EMA, which I have here in green, which I love using for day trading, and then the 20 MA, simple moving average, which I use also as a way to track the progress and also use this as a stop loss for trends, which this would be a good example over here. So I have the 9 in green, the 9 EMA, and I have the 20. So what I was doing, I was watching the NASDAQ all day, right? Kind of had a little initial pump and then a nice drop off for the rest of the day. And if you see here as a pattern, right, it's kind of forming, long term. It's kind of like a cup and handle, right? If you're looking at this from a pattern point of view. But as looking at it from right here, really have no idea what was going on, right? But here's what I saw. So a couple things. So one, I saw that on this huge green candle, right? Like RSI rose, there was a lot of volume that hit up and it broke this resistance, right? If we actually draw a line here on this chart, what we can see is that it couldn't break the 9 EMA, right? It went down, it bounced off it, came back down, consolidated, and then boom, it busted through right here. And then it created a base with the next couple candles, right? So I'm watching this. I'm also looking at the squeeze because I love the squeeze indicator. And if you look at it, it's squeezing, 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 squeezing. That's what happens usually in consolidation, right? And then right here, it goes from red dots to black dots. And then right here, by the way, right, when it's black and you see how it has like a light blue bar, it's kind of hard to see, but that's indicative of a squeeze firing in a certain direction, right? So I got into the trade right here, right, on this 11, 11, 11, right, on this one right here. The first time it fired is when I got in, right? I live in California, so 11, 11 Pacific Standard Time. I got into this trade. I've learned also it's always best to buy out of the money call options when you're going long because they're cheaper and you actually can make more money, believe it or not, with them long term, and it also limits your losses too, right? So when I say more money, what I mean is instead of buying like one 390, which maybe is probably a very high delta trade, say I bought like two 400s and they cost the exact same price as this. Let's just hypothetically saying they were, you would actually make more money with the two 400s, even though they're the exact same debit, than you would with just one relatively at the money. And your potential losses in the short term, I've learned, are also less. But this is only good knowledge to know for day trading. Okay, once you go out days and weeks, and obviously the out of the money ones lose more than the ones in the money because the ones in the money have more intrinsic value. And that's a whole other conversation. All I'm saying is, I normally buy slightly out of the money because it's cheaper and a little less risk. Okay, so I got in right here because a couple of reasons, right? The green crossed the red. Okay, that's indicative of a golden cross on the 5-minute time frame. But you don't just get in when you see a 9 cross a 20. Because look, right here, it crossed here, but then it went down again, right? It crossed here and it went down. What you're looking for is a consolidation. And by the way, moving averages are useless in a consolidation. Okay, very important to understand that because you never want to rely on one thing, right? So what I was waiting for was a breakout, and that happened right there. It went boom, huge volume. The squeeze fired right before, like so right after that huge arrow, the squeeze fired. Momentum's going up. The light blue bars here are indicative of a bullish move. That's where I got it, right? Because it broke the resistant trend line, and we had a golden cross, and the squeeze was firing, and the RSI was rising, right? So those four things gave me confidence. Also on the 15-minute charts, as you see with the squeeze, it went from, bearish, which is the red, to the yellow, which is bullish, right? RSI is rising over here, right? We're getting more volume on the call side. And same thing, right? When it busted through, I mean, look, the 9 EMA on the 15-minute was resistance all the way until that candle, right? And that's when I got in right there. And then what I then did is for me, the way that I do sometimes day trading mostly is I use the 9 EMA as my support. So as long as support is holding, I'll stay in the trade. Right here, this candle broke, and two things, right, to look at. One, the 9 EMA was broken. I mean, it closed below, right? And if you look, I mean, I got out right here, as you see. I got out at 12:39, which was right there. I wasn't waiting because I had a nice $100 profit at that point. I wasn't going to wait. But if you would have waited, look, you would have lost more, right? But then it did bounce off of the 20. Now, a couple of things, right, to look at. One, you see a huge candle. It breaks the 9 EMA. If you also look at the squeeze, it has these darker blue bars. That's also indicative of a bearish momentum or bearish movement. So right here, we started seeing them. So I probably should have got out right here, to be honest, because the squeeze is already fired. It was done. It was over, right? But so seeing this, look at the volume was mostly selling, was red, and seeing it go below the 9 EMA, that was a sell signal. Super simple. And I actually had a stop loss set because what I do is I do like a manual trailing stop because in Thinkorswim you cannot do, as far as I know at least, a trailing stop like automatically. So as the price was rising, I kept raising my stop limit, right? Because I want to get out of this trade with money, right? And not have to be at my computer on the, on the like order screen ready to go. So what I do is I trail. So as it goes up, I move up 5 to 10 cent increments at a time. And right there on that candle is when I hit my stop. So hey, this was a $100 trade. It required about $431 of risk. So it was about 23% profit, not too bad, in about, an hour and 28 minutes. So not too shabby. Okay, so this video, once again, is going over the benefits and usefulness, right, of using moving averages, not in a consolidation, right, busting through resistance, as you could draw your own lines here. Also factoring the squeeze, right, as well, and also RSI and things like that, okay? So I hope you guys enjoyed the video. This was a nice trade. Hopefully some of you guys get into as well. And that's our video for today. Take care.